Hello everyone and welcome to today's webinar, Federal Lobbying and Ethics Rules in 2017. Is your organization ready? Before we get started, I'd like to go over a few items so you know how to participate in today's event. When you join today's webinar, you selected to join either by phone call or computer audio. If for any reason you would like to change your selection, you can do so by accessing your audio pane in your control panel. You will have the opportunity to submit text questions to today's presenters by typing your questions into the questions pane of the control panel. You may send in your questions at any time. We will collect these and address them during the Q&A session at the end of today's presentation. I would now like to turn the webinar over to today's presenter, Jim Kahl.
Thank you, Lori, and welcome everyone to our seminar or webinar today on federal lobbying and ethics rules in 2017. I'm Jim Kahl. I'm joined by my partner, Jeff Altman, and we're both in the Washington, D.C. office of Whiteford, Taylor, and Preston. Just a couple of housekeeping matters. As Lori mentioned, there's the opportunity to submit questions. We have about 45 minutes of prepared information, and so there'll be plenty of time to get to your questions. Also, this PowerPoint that you will be viewing, as well as the webinar itself, will subsequently be on our website. It should be up there in a day or two. Well, 2017 is certain to be a year of change here in Washington, D.C., with a new administration and one party controlling two branches of government. There certainly will be many important issues that will be considered by Congress and the new administration. As a result, many organizations will need to expand their government affairs activities, and there will be organizations who are engaging in federal lobbying activities for the very first time. At the same time, it is a virtual certainty that there will be some sorts of changes in the lobbying rules, and we already know that there are new ethics rules in place and probably other changes that will be coming along from the executive branch as well. And those laws and those rules simply will impact how your organizations interact with government officials. But with those new rules and new regulations and possibly new laws, there are also sure to be opportunities for new types of engagement with government officials. So in this environment, it's important that you understand and comply with the key rules in this area, because that compliance will help you achieve your advocacy goals, and will also, your compliance will also impact your reputation with decision makers in this area. So on your screen, the topics we're going to cover today. The first part of our presentation, we really want to do a review and update on some of the basic rules in this area. We'll talk about federal lobbying rules and regulations. We'll talk about some special rules and considerations for nonprofit organizations, as well as the members of those nonprofit organizations. And then we'll talk about congressional and executive gift rules and updates in that area. Then we'll turn our attention forward into 2017. We'll talk about some new rules that are already in place, and then we'll do some prognosticating as to some changes that may be coming down the road, either because of rules or new laws. And we'll finish up with a few compliance pointers for you in this area. So let's dive in. The first area we're going to get into is lobbying regulation. And at the federal level, this area is regulated by what's called the Lobbying Disclosure Act. The first major consideration under the LDA, Lobbying Disclosure Act, is the question of who is a lobbyist. And unlike some state regulatory regimes you might be familiar with, in the federal regime, an organization first needs to look to see if it has somebody who qualifies as a lobbyist. And if there is a person who qualifies as a lobbyist and then a certain economic thresholds are crossed, then that organization needs to register, and the individual who's a lobbyist is identified in the registration. So first part is to determine who's a lobbyist in an organization, and it's a two-part test. First, we need to see, is there an individual who has made more than one lobbying contact with a covered legislative or executive official about laws, rules, regulations, policies, etc. Then you need to determine whether that individual has spent 20% or more of his or her time on lobbying activity in any 3-month period. If those two requirements are met, and then the organization has made more than $12,500 in lobbying expenses, in the case of an in-house lobbyist, then a registration is required. Let me just back up because there are a couple of key terms that are essential to understanding the Lobbying Disclosure Act. For the purposes of an individual making those two contacts, the term lobbying contacts means either written or oral communications with a covered official. And the covered official can be literally anybody on Capitol Hill, members and staffers, and in the executive branch, it's virtually all elected and appointed officials. For those familiar with the federal system, it's anybody from a Schedule C a level on upwards. So those are the rules, and once the organization is registered and the individual is listed, then subsequent individuals who might meet that two-part definition of a lobbyist are also added as lobbyists for the organization. There are several obligations that go along with an organization being registered, having to register under the Lobbying Disclosure Act. Number one, there's a ban on lobbyists and their employers making gifts to members of Congress and staffers. There are plenty of exceptions, and we'll get to those a little bit later on. There are also quarterly and semi-annual reporting requirements that go along with being an LDA registrant. And very importantly, since 2008, lobbying reports are now subject to GAO audits. There are substantial potential fines for violating the LDA, and in the case of knowing and willful violations, there's the potential for criminal sanctions. On the last bullet on this page, caution is warranted because lobbyists and their employers are very restricted in their ability to provide travel to members and staffers on the Hill as well. Let's get into some of the reporting requirements. Quarterly reports, which are called LD2 reports, reflect two pieces of information. First, the registrant has to disclose the bills, policies, and other issues that are subject of the legislative and executive branch lobbying activities. And secondly, the organization needs to quantify and disclose a good faith estimate of lobbying activity expenses. And this covers a wide range of expenses. It's certainly the costs of the individual's time as well as the lobbying activities, which is a broader term. The lobbying contacts, as we discussed, are direct communications. The lobbying activities are the wide range of activities that may support those lobbying contacts, such as preparing reports and research and strategy that goes into lobbying efforts. Also, you have to include in that calculation the payments to outside lobbyist consultants and percentage of dues to your associations that relate to lobbying activities. Let me note one point here, and it's the very last point on the slide. The LDA gives the organization, most organizations, an option of either using LDA or Internal Revenue Code definitions of lobbying. And many organizations think about using the Internal Revenue Code definitions for ease. However, there is the possibility that using those definitions will greatly inflate the amount of the expenses that you need to report in your lobbying reports. The reason for that is that the Internal Revenue Code definition of lobbying includes activities that are excluded from the Lobbying Disclosure Act, such as state-level lobbying activities are included, as are grassroots lobbying activities, which are also included under the the Internal Revenue Code definitions. So caution is warranted there. The due dates for the reports are on the right-hand side of the screen. For the reports due this month, keep in mind, because of the inauguration day. The reports are due on January 23rd. The semi-annual reports due in July and January disclose a number of things. First of all, these reports have to be filed by both the registered organization as well as the individual lobbyists. The first bit of information disclosed in these reports are various kinds of contributions and payments. These would include political contributions to federal candidates, political parties, and leadership PACs from your organization's PAC, for example. And in this year, an election year, if your organization has made payments to the inaugural committee, those would have to be disclosed. Transition committee contributions, on the other hand, would not have to be disclosed. Also have to disclose various kinds of payments related to federal officials, such as payments for events that honor federal executive and legislative officials, and to organizations that are named for those officials. At the bottom of the page, it talks about certification, and this is key to the contribution report. Both the entity and the lobbyist in their reports have to certify their familiarity and compliance with the congressional ethics rules. This raises two very important points. First is the need to have training within your organizations so folks understand the congressional ethics rules, and number two, to have some sort of survey review done so that the certifying official for your organization
I think we may have a few individual donors to membership and cause-related organizations, and we also have representatives of the organizations to which the first two categories of people give money and pay their dues and make donations. I think that for the corporate participants, I view their associations in Washington otherwise as an extension of their government affairs program. They grouping together with, whether it's individuals or corporations, you're grouping together to further a common mission, objectives, and goals. And having an independent and credible organization helps you pursue your government affairs more than in your individual capacity. I think everyone, so most of my comments will be focused from the perspective of the nonprofits, but it's important for the donors and members to keep an eye on their nonprofits and to understand the implications of what they're doing, as I'll get into in a few minutes. I think there's a common objective to maximize the range of activities and the effectiveness of your organization. Sometimes that involves picking what type of organization to do what types of activities and how many organizations you want. Obviously, you have to deal with legal compliance. You have to protect the tax-exempt status of your organizations. Usually, donors and members want to maximize the tax deductibility of their dues and donations, but as I'll get into it in a moment, there are certain activities where you lose your tax advantage, and those activities may be important. So that's a trade-off that you need to talk about and come to the right balance. A controversial issue is member and donor disclosure. There are some groups, nonprofits, that feel it very important to have transparency and for the public to understand who their members are and who's contributing money. Other organizations don't wish to make known their donors and members because the donors and members become particularly if their businesses become subject to boycotts, adverse publicity, threats, and protests, such as even the recent LOBBYIST controversy. That wasn't a nonprofit, it was actually a political group, but I think the point is that everybody's pouring through all the kind of membership reports and so it's a challenge for those groups and many groups want to keep their members and donors to prevent disclosure. And then of course you have to deal with legal compliance, and you want to avoid audits, investigations, and particularly adverse publicity, which is very important. When you're talking about this area, people generically refer to government affairs or your political agenda or your political activities, but when you're dealing with the tax code and different kinds of tax organizations, you actually need to refine that a little bit to make sure you're talking about the right things. So in this regard, I divided up into several different categories. You have what I refer to as education, which is when you're talking about ideas or public policy. Lobbying is when you're talking about legislative matters. And political, in this sense, is when you're talking about candidates in elections. And you can have very general political communications, such as someone's position on legislation, where you're just referring to people without, saying what, leaving it to the listener to decide how they view that communication. You can have what's called express advocacy, which is where you actually say vote for or against somebody because you don't like their views on something. And that's extended, also includes independent expenditures where you're saying these things. There's a category of electioneering communications that just is a holdover from McCain-Feingold, whereby if you even name a candidate or an office holder in a close to elections, you have to report it. And then the hardcore political activities, of course, are candidate fundraising and coordinated activities. And when you're talking about different bodies, they have different standards as they look at all these things. The Supreme Court has tended to have a very objective standard for free speech and what's allowed. The Federal Election Commission has very objective standards. One of the problems in the tax area is they have a facts and circumstances test, which is very subjective, which has led to many types of challenges. On our next slide here, I've just listed the several key kinds of organizations that we're going to talk about, and then I'll focus on a few. A Section 501c3 organization is your charitable or educational organization. I think the next most common here is a 501c6, which is your trade association or individual membership organization. I think a 501c4 is what a lot of the press refers to as the 501c organization, although the 501c is really the C4s and the C6s. Rather than them being business related, they're more cause related, and so there you see a lot more activity and communications from 501c4s in election season because they're dealing with their causes. You have the C5s, which are the labor agricultural groups, and 527 is the tax exempt status under which you have your PACs, and your super PACs don't have to pay taxes. This next chart is an IFL. But hopefully, if you want to download it when it's available, it'll be a good reference tool. And what I've tried to do is just array the several different categories of nonprofit organizations and go over these key characteristics for each. So you'll see for public education and issue advocacy, which is basically just talking and free speech, all the organizations can do that, and there's no limit on what they can do. The distinctions come when you want to start talking about legislative activities, which is legislation. A 501c3 can do it, but it can't be substantial, and I'll come back to it in a moment. It can do a special election that will limit the amount of lobbying or provide safe harbors for the lobbying activities it can conduct. There continues to be some feeling among large C3 organizations that can't do lobbying. In fact, you can, so I'll go through that in some detail. And of course, a C4 or C6 can do unlimited lobbying. General political and independent expenditures, a 501c is strictly prohibited from doing that. It could lose its tax-exempt status, but the C4s and the C6s can do that as long as it's not their primary purpose. And there's been a big battle about that the last couple years, but the IRS hasn't gone after anybody that keeps under 50%, even though some groups would advocate, public interest groups would advocate 1% or 0%. When you get to candidate fundraising and coordinated activities, the C3 still can't do that because that's political. And the C4s and the C6s, although there's sometimes you can invite candidates in to talk to your restricted class, generally those activities have to be conducted through a connected PAC. The C3 can get charitable contributions, which gives it a preference. It also can get money from foundations and government grants and things like that. The C4s, C6s can get business deductions, and I'll come back to that because the companion to that is that a portion of the dues will be disallowed to the extent they're used for lobbying and political activities. And finally, on the issue of member disclosure, all of these 501c organizations have to file Schedule B as part of their annual IRS Form 990 and list their donors of $5,000 and more. That's supposed to be confidential for IRS eyes only. But there have been some problems with that in the past with inadvertent disclosures, and now, as I come back in a few minutes, a couple states are also requiring the full 990s with the donor names. My next slide here is just to try to highlight some of the planning considerations and opportunities for a 501c3 organization. As I indicated before, you can do unlimited education and issue advocacy ideas. With respect to lobbying, there's this, the statute itself refers to no substantial part of your activities shall be influencing lobbying activities. That's generally referred to as the substantial part test. But except for very large organizations, every 501c3 that we work with, we recommend they take what's called a 501h election because by doing that, you opt into certain safe harbor limits that include the amount of money you can spend on lobbying and grassroots lobbying and also what constitutes lobbying. So under the 501h limits, you can basically spend 20% of your first $500,000 on lobbying, and it's on a sliding scale. It goes up to $1 million cap on a $17 million budget with a quarter of that used on grassroots activities. That's fine for most organizations. If you're a very large organization, though, and has a multi-billion-dollar budget, you're not going to want to limit yourself to a 501h election, $1 million cap, so you won't do that. But it does provide some safe harbors. It tells you how you can do background research that won't count as lobbying activities. It tells you how you can get invited to give testimony so that the testimony doesn't count as a lobbying activity. And perhaps most important for a C3, it can allow you to do communications and grassroots activities. You can spend your entire budget talking about legislation and Congress and what they're doing, and as long as there's no call to action in that, if you don't say, as long as you don't say call your congressman, you can spend virtually all of your budget on legislative related matters. You also have, with a 501h election, if you want to, you can use the simplified LDA reporting for a C3. I recommend that you take a look at 2007-41. The examples that are there I think it will explain the different kinds of things that you can do and still meet the subjective facts and circumstances test. And of course, I've seen many C3s over the years that have established affiliated C4s or C6s in a connected PAC in order to be able to accomplish a broader range of activities. A 501c4 organization and C6 organizations come at it from a slightly different perspective. Of course, they can do unlimited education, issue advocacy, and lobbying. They're now allowed to engage, though, in political activities as long as they meet the so-called primary purpose test. And you're probably all familiar with the Supreme Court's Citizens United decision a couple years ago. That basically says that corporate C6 organizations and C4s can engage in express advocacy and activities. They can speak about electing, advocate the election or defeat of candidates. They can organize their members. They can organize the public. They can do everything except do candidate fundraising, and they can't coordinate their activities with any candidate. But beyond that, they can do whatever they want. They have the opportunity to establish a connected PAC or a super PAC, and they also can establish an affiliated Section 501c3 going in the opposite direction. One issue has to do with maximizing dues deductibility. As I indicated, a corporation itself can't deduct its, for business purposes, it can't deduct its lobbying and political expenses, and so to the extent that you give money to a trade association, that portion of your dues is subject to a percentage disallowance. As indicated before, you may have a trade association, you want them to do lobbying and political activities, so that's usually a management and discussion with the members. My final slide here is just a couple pointers here to keep in mind. Remember that there's the issue of disclosure of your donors on Schedule B, and the Schedule B not only goes to the IRS, but there's a question of whether that gets filed in California and New York. Most organizations I know do not file the complete Schedule B in all of the states and wait for California and New York to ask, or at least limit it there. You need to be very careful the way you report your lobbying and political activities on Schedule C to your IRS Form 990, and using the definitions that Jim was referring to before, and also your political expenditures. And if you do have political expenditures, make sure you're filing an 1120 POL. But if you're involved with your government affairs activities, you don't want to leave this to the accountant or the bookkeeper to do. You really need to look to see what you're reporting to the IRS, because those filings, that part of the filing is public. Remember that no matter what your tax exempt status is, you're subject to the LDA Lobbying Disclosure Act and ethics and gift rules to the extent that you're involved in those activities. It's very important to keep, have some methodology for keeping track of your time and your expenses under all these multiple reporting regimes and definitions to make sure that they're accurate. Some organizations, it's best to keep it simple. Pick what you want to do and have one organization and know the rules. Others want to have multiple organizations, but if you're going to have a C3 with a C4 or a C6 with a related PAC or a connected PAC or super PAC, you need to be prepared for complexity and making sure you deal with all of those issues. And then finally, we're not going to talk about it today, but you need to be mindful, maybe this is a topic for a future webinar, of state compliance and disclosure issues, because to the extent the organization is involved in the state level, you have all of these issues, the lobbying registration, the ethics rules, and the reporting issues that are multiplied by 50 times. And I think one example of that type of activity having gone wrong is a recent headline in the Seattle Times, which says grocery group fined $18 million in fight against GMO food labeling initiative for violating campaign finance laws by concealing identities of corporate donors. So, and it's beyond the scope of what we're talking about today, but it's actually of applicability. You need to be careful how you're collecting or contributing money to your organization, and then how those activities get conducted so that you don't trip state registration and reporting requirements. I think that's those issues I wanted to cover. Jim, you want to talk about gifts?
Thank you, Jeff. Yes, so we're going to move our attention over to the area of gift restrictions, and gift giving kind of goes hand in glove, as I'm sure many of you know, with lobbying activities. Starting off with some big picture principles. It's an understatement to say that gift giving is a highly regulated area. There are rules, separate sets of rules that cover gifts to legislative and executive branch officials. When you're thinking about gift giving, keep in mind that literally anything you might give to a public official, a meal, a cup of coffee, travel, tickets, doesn't make a difference. Almost anything can be considered a gift. Fortunately, in virtually every set of gift rules, there are also gift exceptions. They may be highly specific, but they are there and they present opportunities to enable you to entertain, provide things to a legislative or executive official to help in your advocacy goals. However, when doing that, advanced planning is the key, so you understand and use those rules to your advantage. On the flip side, without advanced planning, it simply may be impossible to undo what is a prohibited gift. For example, that gift may have been consumed because it was a meal and it was illegal. And then you're in the situation of not only having to inform the official that they've received a prohibited gift, but then you have to ask for a check to cover the cost of the meal, which thoroughly undercuts what you're trying to do in the first place. So on this slide, this lays out at the federal level the relevant sets of gift laws. House and Senate have their own set of rules and their own sets of restrictions and exceptions. The Office of Government Ethics issues regulations that cover gift giving from prohibited sources, like government contractors and people who have business before the agency. We'll get to it in a second. These rules were just recently revised and went into effect at the beginning of this month. And finally, at least for the next week, there is an executive order that's been that was signed by President Obama 8 years ago, which greatly limits the gifts that his political appointees are able to accept, with very few exceptions. And so some exceptions that might be available to other executive branch employees, such as gifts of nominal value, are simply not available to Obama appointees. Now, on the next set of slides are some of the common exceptions. I'm not going to go through all of them, but if you look at the slide on your screen right now, it's pulled from the House and Senate gift rules. But these are the kinds of exceptions you see in the various sets of gift rules. So they use normally an ability to invite people to widely attended events and site visits. Use normally the ability to provide promotional items and commemorative items and informational materials. And these are the exceptions that I mentioned that are quite detailed, and but they're there and or can be used to help you achieve your goals. The next 3 pages are details about 3 specific kinds of gift exceptions that we get questions about a lot: widely attended events, receptions, and informational materials. I'm not going to cover those today. They're there for your reference. They tend to be some of the more common areas where people want to use the gift rule exceptions. Where we'd like to turn our attention to next is what's ahead as we see it in 2017 in the lobbying and gift area. We know things have been proposed, and as I've already indicated, some things are already on the books. So let's take a look. We'll explain what's new, and we'll do some prognosticating as best we can. First, let's talk about what the incoming Trump administration has proposed. Back in October, they issued a 5-point ethics plan, the aim of which was supposedly to drain the swamp in Washington. And when you pull that plan apart, there really are 2 areas that they're focusing in on. The first is to expand the lobbyist definition that we talked about under the LDA. Now, the stated goal here is to close loopholes used by former government officials to avoid registration and reporting. Unfortunately, no details have yet been provided as to what the incoming administration has in mind. What might they do? Well, they might delete the 2-contact rule, or they might eliminate or lower the 20% of lobbying activity threshold. We don't know. Either of those, and certainly if both of those were to happen, it would greatly increase the number of registered lobbyists and thereby increase the number of organizations that would need to get into the LDA reporting regime. The second set of proposals deal with broadening the lobbying bans. This is what I would really call tightening the revolving door restrictions that exist. And the incoming administration has proposed a 5-year ban on lobbying by executive branch officials and congressional members and staffers, and a lifetime ban on senior officials lobbying for a foreign government. Obviously, some of that would require legislation. Some could be done through executive order. A possible result of that is you may see many experienced staffers and executive branch folks choosing to leave the government early to avoid any new restrictions. that might come along. In the gift area, we have not yet seen any gift restriction proposals from the new administration. One thing that they might do is they might decide to rescind or modify the President Obama's executive order on gifts to appointees. I think it's quite likely that many executive orders will be rescinded in their entirety, and it wouldn't be surprising to see this go away. But what will take its place, we don't know. It might be stricter rules, it might be more liberal rules, or they may decide just to eliminate the Obama executive order and rely on the Office of Government Ethics rules alone. But this will be an area to watch, and particularly to see if something special is done for appointees versus other executive branch officials. And finally, as I mentioned, the new OGE, Office of Government Ethics rules, went into place January 1. This was a set of proposed changes to the government-wide ethics rules applicable to executive branch employees. It's been in the works for 2 years or more. There was notice and comment, and shortly after the election results, the rules were finalized with a January 1 effective date. The timing of the election and these rules may not necessarily be coincidental. But there's a mixed bag in there. Some tightening and some new opportunities are there. To invite government officials to widely attended gatherings, or for a non-prohibited source to invite somebody to a social event, a government employee now has to get written advance approval. And we also know that the Government Ethics Office considers alcohol not to be a modest item of refreshment. It used to be that coffee and things like that were totally accepted from the gift rules. On the other hand, government officials who can speak at an event are now allowed to attend a speaker's dinner the night before, so additional opportunity for engagement. And there is a new exception to be able to provide informational materials to executive branch officials, much like and they can be provided to members of Congress and staffers. So those are some of the highlights of the new OGE rules, and they are in place right now for all executive branch officials. And so let me turn it over to Jeff to talk about some possible new IRS changes in the offing.
Thanks, Jim. Well, tax reform is something that's likely to come this year, and included in that could be changes to the rules affecting these nonprofit organizations, as I have been discussing. Following the targeting scandal a year or two ago, the IRS came out with proposed regulations that would drastically cut back the types, would change the definition of political activities, that would drastically reduce what C6s and C4s could do. In fact, would even reclassify a lot of what 501c3 organizations do as political, which would be prohibited. And it resulted in hundreds of thousands of comments filed opposed to it, and Congress took action to suspend the rules, which it has continued. Question is whether Congress will unfreeze those rules and what happens to them. Actually, the prohibition against 501c3s engaging in political activities was an amendment that Senator Johnson introduced in the 1950s when he was still a senator, before he became president following Kennedy, because he perceived that as a couple 501c3 organizations were involved in trying to defeat his campaign. So they put in that provision that prohibits C3s from engaging in political activities. I don't think we'll see a broad repeal of the Johnson Amendment, but there's a lot of talk about whether or not religious organizations ought to be prohibited from telling their congregations the views of candidates on issues that relate to the religious communications. There's a question on Schedule B, whether the IRS should continue to collect the names of donors. The IRS can't quite remember why they do it, and they don't seem to have any reasons for doing it. So that is a possibility that issue will be resolved by eliminating the names on Schedule B. And there are those who think that the IRS is ideally unsuited to be regulating lobbying and political activities by nonprofit organizations. Maybe the problem would be somehow resolved by relieving them of that responsibility. In the courts, this whole IRS regime of facts and circumstances test where everything is reviewed subjectively, that's subject to litigation challenges right now, and courts have avoided dealing with it in the past, but that may work its way through the courts. There is litigation in California and New York about whether or not the states can require the names to the donors on Schedule B, particularly since they don't seem to have any need for the information. And there continues to be litigation that's unfolding over the IRS targeting scandal, the withholding of approval or consideration for certain tax-exempt organizations, and of course some people on the Hill who still want to figure out if Lois Lerner or the IRS did anything wrong, so that's not likely to go away. So our last slide here before we take some questions is what we're just calling our compliance takeaways. And I think that just to highlight what these are, I think the most important thing is for you to, each organization, each member of an organization to some extent, to understand the rule and to educate the people that are responsible for complying with all of these rules, how to manage their activities and what's going to trigger registration and reporting requirements or ethics and gift rules to make sure that you're in compliance. I think what's really important is always to sit down, instead of talking about rules, to sit down and talk about what you want to do and then figure out a way to do it. That's what I usually do with clients, is what do you want to do, and then let's figure out a way to do it, but that requires advanced planning, and there's plenty of opportunities. Maybe it has to do with the kind of food you serve or what kind of event you have. Someone needs to periodically review all of your activities that we've been talking about here this morning or afternoon to make sure you're in compliance. And I said before, we haven't covered state activities today, but it's important to keep your state activities in mind and comply with all of these rules on a 50-fold scale. And then I think one of the most important things is just to have somebody in your organization that's in charge of all of this. You know, that you don't want to just have the meeting people that are planning events and the government affairs people that are planning a fly-in, and the accountant is working with the CPA on the 990 and your information reports. It really takes an integrated effort, and it requires someone who's in charge, and it also requires someone in the organization with authority to say that as you engage in these activities, you're going to do them right, because they could be of tremendous advantage to the organization and its members. But if you don't comply with the rules, you risk terrible negative publicity, like the Washington State case that I was talking about before. It's one thing for organizations to weigh in on a ballot initiative. Voters and the public might have a view of the companies that are weighing in on an issue, but it's a lot worse when it finds out that the companies are trying to, evade the law and paying an $18 million fine that isn't covered by insurance. And that's the kind of thing that you want to avoid, because above everything else, you want to protect your reputation and your mission and figure out how to do what you want to do and do it right.
Well, great. We have some time for questions, and several have come in. Let me read the first one, and it says, I thought I heard Jim say that aggregate state lobbying expenditures had to be included in federal disclosures. That's part one of the question, and let me clarify what I was saying. I think I was trying to draw a comparison that, unlike many state lobbying systems where there's very detailed disclosure of lobbying activity down to, for example, individual costs of meals, at the federal level, under the LDA, it's just an aggregate amount that is reported. So I think that's the contrast I was trying to draw. However, if an organization chooses to use Internal Revenue Code definitions for quantifying lobbying activity expenses, then you may in fact be required to put in your aggregate some state activities. And that's where I was talking about it could inflate the amount of lobbying activity expenses. Many organizations we've worked with who decide to go to the Internal Revenue Code definitions will then the following year revert back to the LDA, because of that inflator that we see. Did you have a comment on that, Jeff?
Yeah, I would just add that what Jim's talking about is reporting dollar amounts on the LDA, so you don't actually disclose what the state activities are you're doing. It's just the dollar amount. And the rules are a little bit different for 501c6 organizations. You're reporting, if you're using the Internal Revenue Code definitions, you're reporting your state level activities. If you're 501c3, you're reporting both your state and local activities, but in either case it's the dollar amounts and not the actual activities.
Yeah, the second part of that question, and it's a very good question, and that's if an outside lobbyist is retained, the expenses need to be included in the disclosed amount, which is correct. But the question is, but is there a separate disclosure by the registrant of what was lobbied and who did the lobbying? As a technical matter, each registrant discloses the lobbying that it does. So theoretically, if a company that's registered had a lobbyist doing something entirely different from what they were lobbying on, the registrant, the corporate registrant, wouldn't have to disclose it in the LDA report. Having said that, in most instances of the clients that we've dealt with, that where an outside lobbyist is retained, that tends also to be an issue on which the registrant, the corporation, was already doing lobbying or is already involved. So effectively that issue ends up being reported in both places, by the retained firm as well as by the corporate registrant.
But the corporate registrant isn't breaking that down by outside lobbyists, right? They're just reporting the total dollar amounts that they're spending, and it's the individual outside lobbyists that are including in their reports how much they're getting paid individually and what issues they're working on.
Correct. Okay, next question we have is, what should we do if we're notified that our lobbying reports are being reviewed by GAO or DOJ? Jeff, you want to start?
Call Jim.
You want to start on that?
I would say that the GAO is sort of the friendly arm of this. You could you get a letter from the GAO or from the clerk's office saying that, you know, have you done this? Why haven't you filed a report? Things like that when they come in, and I'm interested in your experience, Jim. It's usually a very general review. As Jim was saying, they're not looking for specific dollar amounts, but they want to know if you have a method out. They want to look at what definitions are you giving to your people? How are you keeping track of your expenses? Why should we believe that these numbers are correct? And if you have a pretty good system and explanation, they go away. And if you don't, then they start to dig. The contrast would be is when you get a letter from the Department of Justice. Sometimes they're a little bit more serious, which means you may have ignored a few letters from the GAO or from Congress, or they're picking up things that are missing. I think when you hear from the Department of Justice, I think in either case you probably should let your counsel know and just guide you through the process, but it's not that serious.
Right. And sort of what underlies, I think, Jeff's answer is partly is not what you need to be doing once you receive the notice, but what you should be doing now, which is to be keeping records, having established procedures for quantifying lobbying expenses and following those procedures, and then having the backup data for to support whatever it is, whether it's expenses or contributions or your certification of gift giving. So if you do those things now and have those records, then the responses to whether it's GAO or DOJ becomes pretty straightforward.
Yeah, and I should just add to that, one of the certifications on the LDO 203 is whether or not your organization understands the rules.
Yeah.
So one of the questions is, what training have you given to your employees that they're not allowed to take, legislatures or staff out for drinks, and what kind of training do you do for your people? And if it turns out you don't do any training for your people, and the people that had training when HOLOGA was passed in 2008 are no longer there, that could be problematic. So that's one of the areas where you want to be sure you have good answers, which is on your methodology and training that you're giving to your people. And if they think you know what you're doing, they'll leave you alone.
Yeah, I'll just add one thing to that, and it goes to the certification. The person who's certifying for the organization has to have a basis for saying the organization is in compliance And for larger organizations, that normally means some sort of outreach within the organization to make sure that that individual knows, in fact, that no impermissible gifts were made. And we always recommend, as a part of that kind of survey process and certification process, that relevant people are actually given a copy of the House and Senate gift rules and instructed to read it, so somebody can certify that the organization is familiar with those rules. We've got another question here also about lobbying, and it's with respect to the LD2 reports, how do we calculate overhead in connection with our employees' time spent on lobbying activities? As I mentioned earlier, a lot of expenses have to go into that aggregate good faith estimate, including overhead applicable to an individual's time spent on lobbying. Many organizations have those numbers down with great detail, and it may be that your accounting or HR departments know that number. If not, an acceptable way to do this is to add 75% to the hourly value of the time the individual has spent on lobbying activities, and that will be acceptable for LDA purposes, and it's also one of the acceptable ways under the Internal Revenue Code. Okay, another question that came in is, we think our organization is complying with the LDA, IRC, and other rules regarding our lobbying efforts. How can we be sure? Well, Jeff, how can they be sure?
I think that you really need to have some appreciation for someone needs to have an appreciation for all of these different rules that we've been talking about, the lobbying disclosure rules, the tax rules, and the ethics rules. And someone needs to know what they are, and to review your activities. There has to be an awareness of what these rules are, and the people are following them. So go around and talk to your meeting planning people. Go talk to your people. Check and see if you have a methodology for keeping track of your time and expenses. Are you using the LDA or the Internal Revenue Code definitions? Who's keeping track of the time and expenses? I know. Make sure that if someone's reviewing the tax deduction disallowance percentage, to make sure it's correct, that your people with knowledge of these rules playing a role in the calculation of those numbers. I had a client a couple of years ago where the CFO got in big trouble. In fact, got terminated because they were using the wrong formula for computing the disallowance for years. They were reporting up closer to 30% when it should have only been 15% because they had the wrong formula. Means all the member companies had to go back and explain to their finance people why their tax deduction should have been higher, and also they ended up paying an extra 30 or 40% on their lobbying expenditures. So going back and taking a look at that, making sure your people are trained. I know when we conduct reviews, we come in and say, what's your timekeeping system? How are you keeping track of expenses? What's your training program? Let me look at your 990. Let us look at your LDA and your FEC reports, and usually in about an hour you can figure out areas that need to be reviewed. But I think you can do that internally as well.
I think in this regard it's also important to keep in mind that, particularly if you have a large government affairs shop, activities are rarely static over time. So it's important from time to time to review the activities that are going on, whether that's on the lobbying side or the gift side, or we haven't really gotten into political contributions, but look at all those activities to assess, are you doing something new that raises a new risk, and what procedures do we need to have in place to address those risks.
I mean, I think we're also talking we're talking about the corporate members as well here when we're talking about all these issues, because the rules apply, other than the Internal Revenue Code definitions for lobbying activities for C3s. Otherwise, the rules are all the same.
One last question that's come in raises some of the same issues. Our company supports a number of trade associations. What are the biggest things we should be worried about as a member of the association?
Would you like me to try that? I get all the simple ones. So as a member of an association, you want to make sure, of course, that you're meeting the objectives of belonging to the organization, that you're getting value out of it, and that it's worth belonging to. But you also want to make sure that it's, you're not going to get any adverse publicity out of it or get wrapped up in audits and investigations. I've had members and donors of associations that don't handle their finances correctly. When they get audited by the IRS, the audit could go right through to the member company. You need to make sure that the tax deductibility issue of the dues is being properly calculated. And I think one of the biggest issues is probably how the activities are planned and how the money is being conducted for IRS purposes, but also for not so much here, but well, actually on the LDA reports. The Lobbying Disclosure Act reports of the association don't usually have to report the names of the member companies that are involved in the lobbying activities, but if you're involved at a certain level or give a certain amount of money, then those names become disclosable, and you just have to make sure that you know what those tripwires are and that you're comfortable with that result. And also, depending if monies are collected for a particular cause or for a particular effort, sometimes that triggers registration and reporting requirements for the FEC and the state level, and sometimes it's better just to give general dues to an organization and let them decide how to use the money.
As Jeff mentioned earlier, a case of some note coming out of Washington. For many corporate supporters of trade associations, the disclosure issue, what's disclosed about them as a corporation or needs to be disclosed about them, becomes key. In the case of the Washington case, the trade association did not make a disclosure it should have, with the result that when the information eventually was disclosed, it had ramifications for some of the contributors to the association. So making sure that you're engaged with the association, and to the extent that there are disclosure obligations, they know what it is and are engaged to make sure what will be disclosed or has to be disclosed.
And just to emphasize the point, part of that relates to how the money is raised for the particular effort and who's directing the effort, and whether it's a general association activity or whether you have people that are contributing dollars to go into a special targeted fund. So those are all decisions that you have to make. There's pluses and minuses to it. If you need to raise $10 million for something, you just need to do it right.
Well, those are all the questions. We thank you all for joining us today for the webinar. Our contact information is on the screen in front of you. If you have any additional questions, you can reach us at those numbers and at those email addresses. And as I mentioned, the webinar will be available on our website in the next day or so. Thank you for joining us today.
Thank you.